So a few weeks ago, I made a video about GAXY in which I talked about how I thought the stock was, I liked the company, but I thought the stock was really risky, and I thought that new investors should stay away. And that video got a lot of very positive comments. In this video, I'm going to go over some recent developments in the world of GAXY stock. I'm going to give you my thoughts on it, and stay to the end because I'm going to give you a tiny little prize. Now, for a while, the stock has been relatively flat. However, from the 5th until around the 16th, the stock had jumped up 133%. Now, during this time, I checked because, like I said in my last video, I'm interested in the stock. It is on my watch list. I am curious about what happens to it. I checked the news. I checked Google News. I checked the company's website. I checked Megan's Twitter. I couldn't find any qualifying news to back up that 133% gain. So if you were a GAXY investor and you know what happened during this time, please let me know. But as far as I know, nothing happened. If you are a GAXY shareholder and you see this stock jump up 133% without any reason to back it up, and you aren't worried, like this does not cause any kind of concern, that's some new investor shit right there. Now, that's not an insult. I've done it myself back a year ago, 2 years ago when I first started investing. A stock jumping that quick without any news to back it up is a cause for concern. Not to mention, this was at the same time that Redditors were pumping up stocks like GameStop, and then they moved on to biotech stocks. It may not be a huge stretch of the imagination to assume that GAXY maybe got some of that love. Now, I can't confirm or deny that, and if you guys do have some news to back it up, please let me know in the comments, and I'll be happy to retract those statements. And then on the 16th, right after earnings, everything sort of went to shit, didn't it? It kind of really went to shit, didn't it? People invested just lost half their value. GAXY just released their earnings report right around that time. Now, if you read the Yahoo News version, you think everything was happy. Look at that, revenue, 32%. All these look like good numbers, right? If you looked at those numbers and no further to get your earnings report, well, that's some more new investor shit. I want to show you a little something I like to call a 10Q. This is a 10Q. This is their latest 10Q where they report their actual numbers. Now, if we take a look at revenue, on a year-over-year quarterly basis for 3 months, that actually dropped. Now, 2020 was a pandemic year. I ain't mad at that whatsoever. That's perfectly fine. From a 6 month basis, yeah, they rose about 30%. However, once we get down to the operations on a 3 month basis, the loss dropped by quite a bit. But from a 6 month basis, they rose quite a bit. But the scary numbers come below. This shit right here. Now, some of this is them paying off debt. Some of this is due to this purchase agreement, which we're going to get to in a second. But none of these numbers look good, do they? None at all. They went from a 2.8 million loss on a 3 month quarter year-over-year basis to a 7.7 million loss. And on a 6 month basis, they went from a 4.8 million loss to a 20.9 million loss. Going further down, if we take a look at the weighted average common shares, they went from 17.5 million to 2.3 billion. That means if you've owned shares back in 2019, your share is just got diluted by this much over the next year. Your share is worth less. And if we take a look at the balance sheet, their cash went down, which is fine. Now, their assets did go up. They weren't lying. They went from 4.4 million to 5.6 million. But look what also went up. Their liabilities. 12.2 million to 13.3 million. Now, this is going to come into play in just a little bit. But right now, their liabilities dwarf or more than twice their assets. And that is a problem. That's one of my biggest issues right now with this stock is their balance sheet, although it's getting better, is still kind of fucked. Their cash flow is not much better than this time last year on a 6 months basis. They're getting most of the money through financing, which is okay since the business is just starting out. But I mean, the expectation is that this sort of stops and the company eventually starts, being able to fund themselves instead of financing themselves by selling their own stock and convertible notes, which convert into stock. Basically, this company is paying for itself by selling off its own stock, which is diluting its own shares. So one of their interest expenses from that income statement is the equity purchase agreement. Now, I'm not going to read the entire thing. You can read this as I go through it, sort of. So there's an investor that agreed to purchase 10 million of the company's common stock from time to time during the term of the purchase agreement, which is 2 years, which apparently it was restated on December 29th, 2020. So this is going to go on until at the end of 2022. Now, before the agreement was signed, the company gave this investor 50 million shares just as consideration. Diluted the shares even more. Just gifted the investor 50 million shares. Now, thankfully, it worked because they signed it and now they're going to buy more shares. But if you are a financial guru, I want you to tell me how this is a good thing. Now, I do understand that this is how the company is being funded now through this equity purchase agreement as the investor buys shares and stuff. But I don't see how this puts the company right now in a good financial situation. I mean, so my thoughts on this company is that this company is growing and it is sort of heading in the right direction. However, like these interest expenses and this debt and shit is killing it. Now, to the company's benefit, to GAXY's benefit, they did pay off all of their debt. So, theoretically, a lot of this shit should stop this quarter. So, starting next quarter, things should get better. So my overall opinion of this company is that I feel this company is headed in the right direction. And as long as the revenue increases faster than the loss puts the company out of business, I think this company is going to eventually be in a very good place. But that is on a very long-term scale, and a lot of things have to go right for the company. And so, to add further insult to injury, 2 days after the earnings report, Trading 212, which is a major brokerage in the UK, they no longer allow you to buy this stock. The securities were under revision because they are no longer penny stock exempt. So this is GAXY among two other stocks. Now that the status has been removed, unfortunately, we cannot provide trading with them. So right now, GAXY is no longer considered penny stock exempt. Penny stock exempt means that a company meets one of the following criteria. Number one, a price of over $5 per share. GAXY certainly does not meet that criteria. And then it has to have either one of these two things. An average revenue of at least $6 million for the last 3 years, which GAXY does not meet, or net tangible assets in excess of $2 million if the issuer has been in continuous operation for at least 3 years, or $5 million if less than 3 years. Now, net tangible assets is physical assets minus any liabilities. Now, you're supposed to subtract goodwill and all that stuff. However, we saw right there on the balance sheet for both these quarters that, this right here, this minus this, presents a negative number. So they are negative net assets. That means they fail all of this criteria. I did read some stuff from the CFO, Megan, and some tweets and stuff, saying that she's going to try to do some stuff about it. She's contacted them through a lawyer and stuff. But, they're not going to stop being penny stock exempt. They don't meet the criteria anymore. And unless they're going to work something out with Trading 212, and that is possible, those shares are going to remain delisted from that platform. And that is a huge negative, in terms of the short-term performance of this stock. Now, this stock is available and still available in the U.S. You can still buy it in the U.S. I don't know how that losing the penny stock exempt status is going to affect it being able to be bought in the U.S. But if you live in the U.K. on Trading 212, you can't do that. Now, I don't know if the U.K. has other brokerages that allow you to, but Trading 212 is a major one. I know there was a comment in my last video saying that, yeah, all stocks are risky. And that's true. All stocks are risky, but there is a sliding scale of risk. And it is my opinion that stocks like Microsoft, Walmart, are on a much lower level of risk than stocks like GAXY, which are fighting to stay on the stock market. So if GAXY stock was risky back when I made that first video, it just got a hell of a lot more risky now. If you know the stock is risky and you still choose to buy the stock, how should you go about it? Well, if you're from the UK, you don't. But if you're not from the UK, well, let's talk about it. First, you need to be absolutely sure that this company has a future. That means not listening to your favorite YouTuber and not listening to me. You need to go through this 10Q, go through all of it, look through the company, form your own opinion, and ask yourself if you think this company has a future. If you analyze the data and your opinion is that this company does have the future, well, then I would suggest investing in an amount that's not going to break the farm. Like maybe you can buy 2,500 shares at this price for $100. If you think GAXY is worth it, I mean, that's probably a good amount. Now, the problem is, let's say your stock doubles. So let's say let's say Monday comes along. I'm filming this on Saturday. Let's say Monday comes along, some freak thing happens, and this stock doubles in value. It goes up 100%. Well, now instead of $100, now you're up to $200. That's what presents kind of a weird situation for undisciplined new investors, because you're up 100%, but that's not a lot of money. Like this isn't gonna make any big bucks until it goes up to maybe $1 or so. And in order for that to happen, that needs to go up 2,500%. I mean, if you're gonna invest in penny stocks like this, I mean, them's the breaks. The point is that, I mean, I would recommend against it, but if you invest in this, invest a very small amount, an amount that you won't miss losing, and then never look at the stock again. Now, if you made it this far in a video, whether you like me or not, thank you. And as promised, I am going to give you guys a gift. Now, I've been looking at this stock for a while, and there is a situation in which I would buy this stock while it's still being a penny stock. So I'm going to meet you guys halfway here. So the first thing I want to see is, so they should be done with this interest expense, you know, based off of debt and stuff. And I want to see that continue to be true. So they finally got out of debt. I want to see them. I want to see them continue to survive without getting themselves back into debt. So I want to see this stop, or at least go down in some manner. I also want to see revenues continue to climb. A very important thing I want to see, and this is very important, is that I need to see this asset versus liability game get fixed a little bit. I'm glad the assets are going up, and I hope they continue to go up. But I need to see more assets than liabilities. I gotta see that. I need to see a better balance sheet. Now, if the company fixes all that, and then I see revenue continue to climb with no bad news in the background, at that point, I may consider a small investment. But these numbers have got to get better. These numbers have got to get better. And I need to see them stay out of debt. But, I mean, I feel like that's going to be a while before that happens, but I will keep watching the stock every week. Now, will the stock still be 4 cents when it happens? Probably not. The stock should go up if the company's situation continues to improve. And if the company fixes its balance sheet, it might get back on trading 212. I mean, the stock will probably be closer to 50 cents, 75 cents, or whatever. And I'm happy buying a stock at that price. Yeah, I would make more money if I bought the stock at 4 cents, but that's not my style. I'm not that kind of investor. I need to see some more value in this company before I'm convinced of that. But anyways, thanks guys. Take care. Have a great day and eat your vegetables.